I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a prolific financial writer. He is also the marketing director at Miles Franklin Precious Metals. I'm talking about Andrew Hoffman. Andy Hoffman, thanks for joining us today on USAWatchdog.com.
My pleasure. It's always fun to be here.
Well, with gold, getting a bit of a bid under it and breaking some trend lines, I just wanted to sit here and read the headline to your latest article that just came out. After 5.5 years of precious metal suppression, they're actually suppressing the price of precious metals, right? As they told us they weren't doing it for years and years, that we were crazy. How much ammo does the cartel have left? And so gold is catching a bid, and you wrote an article that basically pointed to the fact that they are running on fumes on trying to push down the price of precious metals. Tell me about that.
Okay, we're going to talk about this on several layers. Obviously, as we call it, the gold cartel. This has been going on for decades and decades. You can go back to the London gold pool in the 1960s. You can go back to what they did at the COMEX in 1980. In trapping the Hunt brothers, which were doing nothing compared to what's done today, and certainly nothing illegal. To what the modern version of what I call the New York gold pool, which started in the mid-1990s when Robert Rubin came over from the Goldman Sachs to run the Treasury and created the, quote, strong dollar policy, which simply means to hoard all of the gold, and then they could short and sell it and encumber it to the point that you can, promulgate the dollar hegemony a little longer and at the expense of the future of the country. Because look what's happened since the mid-1990s. The U.S. has become a global pariah, the biggest debt load of all time. And we lost all of our manufacturing base, and the purchasing power of the currency has certainly collapsed. And that's nothing compared to what the other currencies of the world have done, which don't have reserve currencies with the amount of stability that the dollar has. And so, yes, they've been holding the price of gold down throughout the entire time, as they've been doing for centuries, because gold has always been the only competitor for the fiat currency regimes. Every fiat currency regime has failed, and every fiat currency regime has been in competition with gold, because gold was the only money that was ever used until fiat currency was created by the Chinese 1,000 years ago. The problem is that this current machination, this current version of gold suppression has brought it to its knees, because they've basically destroyed the mining industry to the point that production is now free falling. Particularly in gold, it's going to be falling for 25% over the next 8 or 10 years. And in silver, which also peaked, as it's not as easy to get the numbers for how much it's going to decline, because most of silver is a byproduct of copper, zinc, and lead mines, and copper, zinc, and lead are heavily oversupplied, and we're going into this horrible depression worldwide, so there's going to be a big cut down in their supply as well. Of course, we're already, despite all of the efforts to hold the price down, we're at a record amount of demand. Give or take, we might be slightly below the record level, but the record level was in 2015. 2016 was right around there. 2017 has been slow in the West because of this bubble that's been created by the PPT. But in the East, it's as strong as ever, because basically every currency in the world is at or near all-time lows, and the price of gold in every currency in the world is at or near all-time highs. So anyway, we're at a point right now where they're still fighting gold as if gold is the primary enemy, to the point where their system is dying and the supply-demand for gold is only tightening. But now the powers that be are facing a new threat, a threat which I think is going to be even bigger a threat than gold and silver it is to their monetary hegemony, and that's Bitcoin. Because now they're fighting, now there's a decentralized monetary system, which is in its nascent. So when people go, well, it can never be money, it's only been around for 9 years, and it's already taking on those properties. So now what I said was always a one-front war against gold, which frankly is its real use case in the world is as a store of value, not as a transactional currency, because it's, generally speaking, it's inefficient. I mean, you can't just walk around with gold and transact. But digital currency is going to be able to do that. So it's going to take the pressure off of gold as the primary threat to the cartel, at the same time that they are running out of supply of gold. and at the same time they're hyperinflating their currency, so demand is only going to go up. So I think what, as I said, it's always been a one-front war against gold, which they've handled in the paper markets to the point where they've almost destroyed themselves. They're running on fumes. But now it's a two-front war because the physical gold and silver markets are as tight as ever, and now they have the decentralized cryptocurrency markets, particularly Bitcoin, to fight. And I have a feeling that once Bitcoin really takes gets bigger, now it's up to a $50 billion market cap, they're going to realize that this is our real day-to-day transactional enemy.
One of the things that you brought up in your post, and I wanted to hit on this, is that the cartel running out of ammo to hold precious metals lower at their lowest ever inflation-adjusted prices. That is an amazing statement. Even at we're approaching 1,300. The lowest ever inflation-adjusted prices. Explain that to people.
Well, it's funny, when I said that, I only said it intuitively because it was pretty obvious that with all the suppression they've done all these years and all the money printing, I said 10 years ago the price of gold should be $15,000 to $20,000 just based on the money supply that's been overtly printed, what they tell you, and how much gold that they say they have, as in the 8,133 tons that are supposedly at Fort Knox, which is probably, for all intents and purposes, zero. And that's 15 to 20,000 based on those numbers, and we know that those numbers are completely ridiculous, so the number could be higher. So when we talk about inflation adjusted, I figured with all the money that's gone on since I made that prediction, it's probably higher. And then sure enough, Jeff Clark today, a fantastic analyst, put out a chart showing the inflation adjusted price of gold going back forever. And what do you know? We're right at the all-time low. And this is at a time where inflation in terms of monetary printing is the highest it's ever been. It's so funny when people talk about how the Federal Reserve is not printing, so it's conservative and tightening. No, the Federal Reserve, first of all, is doing plenty of stuff covertly. I mean, who do you think bought all the treasuries when the Chinese and Russians and Arabs were selling last year en masse, and Japanese? And of course, they're buying stocks. I mean, why do you think stocks bottom every day with what I call the dead ringer algorithm at 10 a.m. Eastern Standard Time? That's the Fed's open market operations. I mean, plenty of other central banks are buying stuff overtly. I mean, the Japanese, the Swiss, they're buying stocks and telling us they're doing it. Of course they're doing it. But anyway, the money printing without the Fed overtly printing and saying, yes, we're doing QE, is at $250 billion a month right now, mostly the ECB and the Bank of Japan, neither of which has a chance in, let's call it the hot place, as David Stockman says, of slowing that down anytime soon, because their Ponzi schemes are right at their end game as well. And by the way, their balance sheets, the Feds, the Bank of Japan's and ECB, just caught up to the Feds. Amazing. I mean, it's amazing that Japan could get that high considering how small their country is. But all three of them have $4 to $4.5 trillion balance sheets, and that's excluding all the stuff that they've done off balance sheet. And again, that's with the Fed not doing QE, which they're obviously going to have to go back to soon, because now the U.S. is unequivocally at its lowest point in economically that it's been in our lifetimes. I wrote that years ago, and that was before the last year or so where the GDP prints, which are ridiculously goosed upward compared to what they should be, have been the lowest that they've been since the 2008-2009 crisis. In fact, Michael Snyder, he's one of the great underrated analysts in our sector. Man, does that guy work hard. He actually did the research and said, over the 1930s, if you average the GDP growth, and again, back then the GDP growth was honest, it didn't have all these statistical adjustments to make it look better, like double seasonal adjustment during the winter and all that. It was 1.33% per year. The last 10 years up to this quarter, 1.33% per year. So again, now we have, then we had no debt. Now we have 20 trillion of debt plus 5 billion off trillion plus 5 trillion off balance sheet plus all the derivatives. We have no manufacturing base, the lowest labor participation rate ever. Our real wages are as low as they've been. The cost of living is as high as it's been. And now we have these, as I call it, Dotcom valuations in a Great Depression era, thanks to the bubbles created by the Fed and the PPT to just keep this game going a little longer. So in terms of gold, absolutely, this is the lowest it's ever been in inflation-adjusted terms at a time where demand is arguably the highest it's ever been and supply is arguably the lowest it's ever been of above ground available for sale. And there's never been a time where gold supply was ever falling, and it's going to plummet. So I have no doubt in my mind that, what Gaddis said way back when in their beginnings, 15 plus, got closer to 20 years ago, that the end game is always going to be defined by the running out of physical metal. And we've had plenty of shortages in this space. particularly in silver, which is far tighter than gold. That's why they have to hold it down much more. We had shortages, a big one in 2008, 11, 13, 15. We'll have another one soon. And this time around, they're not going to be able to just print their way out of it. I think this is going to be the end game. As I wrote today, everyone needs to read my article. It's called 2017, the Year of Monetary Revolution, Revisited, because I wrote the original one on January 2nd, saying this is the time where the world changes. This is the time where the 99% fight back. And a big reason why they're going to be able to fight back is because of Bitcoin and cryptocurrency. It's going to give them an avenue to fight in a decentralized manner against the system that forever, for decades, for centuries has enslaved them. I don't think that, aside from maybe religious crusades, I don't think anything has destroyed humanity more than fiat currency. And this is the time where technology has been created that's going to be able to get around that and beat the governments. And at the same time, it's going to liberate gold and silver for to be able to do what they've always done best, not be money, day-to-day money, be monetary value. I wrote last week, decentralization, the monetary value of the future. Gold is decentralized just like Bitcoin, and gold is best served as a store of value. And when it's unleashed from the control of the cartel that it's been under, this version of the cartel for 20 years, it's going to have a parabolic surge just like Bitcoin, and it's going to become scarce just like Bitcoin, and it's going to be in the news just like Bitcoin, except it has a completely different use case. The use case is to store value for generations.
And silver, the same. People say that silver will go up. Cliff High has said this. Many people have said this. I just had Cliff High on. He's with you on the Bitcoin. He thinks it'll be 13 or 14,000 early next year, sometime in February. But he says silver is going to be it's going to be crazy. Jim Sinclair says silver will be gold on steroids. Do you think? Would you agree with that? What is your consensus, or what is your opinion on that? Silver.
Well, I've been around as a financial analyst now for 25 years. I'm a CFA. I worked on Wall Street, and I've been in the mining space for 15 years. And so I talk about facts. I really don't care what Cliff High says. I don't care about WebBot. And anyone who does, good for them. But I talk about facts, and the facts tell me not what the price of silver will be. I mean, I can estimate it, but the fact that the supply and demand are the tightest that they've ever been, and the reasons that people own gold and silver are the same reasons that they've always owned gold and silver, because they are the best stores of value we've ever had in mankind. Now, of course, silver also is one of the most indispensable industrial metals, which only makes the demand, the supply that much tighter. So when you talk about a point where all these monetary factors are hitting at the same time, I think it's going to be unleashed in a big way. And I'm not going to make a prediction of the price, but it's going to be a lot higher. And as I wrote last week, I don't really talk about this much. I said, we're talking about gold is the lowest inflation adjusted price it's ever been. Well, I said that the silver to gold ratio is the most undervalued it's probably ever been in history because of this suppression.
Wow.
And I mean, it's pretty, for it to be 70 to 81 at this point, where we're having periodic shortages and all the currencies are being destroyed, and we're basically at or near all-time high levels of demand, maybe not here in the United States because we had a slight drop-off this year, but everywhere else around the world where prices have been soaring because currencies are crashing, I think it's inevitable that it comes back into vogue as a storage of value asset.
And when you say 70 to 81, you use silver, you multiply the price of silver 70 times, and then you get a price. It's equal to the price of gold. And just so for the home gamers here that aren't as sophisticated as you, so you're saying the $17, $18 or whatever silver is, and then you multiply it 70 times. What should the multiple of silver be to gold? What's the traditional multiple? Like 15?
Right. I mean, it's one of these things where people want to just say, well, it historically was X, so it should be X again. And there is something to that. I mean, historically, a lot of the times they were pegged to each other. And a lot of times when they weren't pegged, the ratio was about 15 to 1 because that was the ratio of how much they came out of the ground. They were both considered money, and silver was 15 times more plentiful than gold. So it was around that for many centuries. It really wasn't until literally right after the COMEX was started in the 1970s where all of a sudden the ratio blew out. And, some people say, well, it was demonetized. But the fact is, we sell, at Miles Franklin, we sell as much or maybe more silver than we do gold. So I really doubt that especially in these times of currencies being destroyed, that all of a sudden the metal that is far more affordable for the vast majority of people in the world is demonetized. Rather, I would say it's just violently suppressed because of the fact that it is the canary in the coal mine. I mean, if it breaks out, gold breaks out. And as a result,
so you think silver will break out before gold?
No, not before gold. I just think when it does, when they do break out, the ratio is going to collapse. And I mean, look, in 2011, when silver broke out and they were forced to do their Sunday night paper silver massacre on May 1st, 2011, saying, oh, well, we killed bin Laden and that's why it went down, all that stuff. You know, the ratio had fallen all the way to 35-1. Of course, it's going to go back to that level. And frankly, I don't see why, especially because silver is now less plentiful than it used to be. The ratio coming out of the ground is 9-1. And in my view, in this monetary world, silver is as valuable as a monetary asset as it ever was. So I think it should easily go below 35. It could easily go down to 15 again. And either way, when it's 70 now, the trend is to be going down.
Silver dramatically undervalued in your estimation.
Yeah, and look, when you say when they break out, it's usually gold that breaks out first because it's the chief monetary asset of the big money. And when it does, and people are confident, then silver breaks out. And when it does, it breaks out in a big way, and the ratio falls. I mean, that's how it's happened in the past. If I were a big investor, that's how I would think of it. It's kind of like, you see Bitcoin explode higher, and then after that, the altcoins start to explode higher on the backs of Bitcoin, and they go up more. It's just it's a more illiquid market and it's more undervalued. I'm not talking about altcoins, I'm talking about silver. So that's what typically happens, and that's what will happen. And again, both of these are supported by the fact that you have the supply is falling, and two, the above ground available for sale inventory is as low as it's been. Look at just what the COMEX is, but look at the mining costs. I mean, there's no one in this space, no one who has harped more about the fate of the mining industry and what's happened to it. I worked in the mining industry for 5 years, from 2006 to 2011, and I worked in mining finance and investor relations for mining, and I pretty much did everything there was in that sector. And I spent 6 years ago, I started warning people of how this sector has been decimated, and that's nothing compared to where it is today. Production is declining, debt, share counts up, the risks in the sector, expropriation, windfall taxes, the environmental kind of issues, never been higher. So the fact is, the mining industry cannot, I mean, I'm not talking about whether stocks will go up or not. I'm talking about the mining industry cannot produce more metal. We just had our Miles Franklin Silver All-Star webinar panel, the third version. We just had it a few weeks ago, and we determined the same thing as we determined years ago, that production is falling and it's not going anywhere but down.
When does this... a lot of people have, and I mean smart people, I mean Paul Craig Roberts is a former assistant treasury secretary, a lot of big hedge fund guys, a lot of people have been shocked, amazed at how long they've kept this thing afloat. How the entire financial facade illusion that we have, that we have an actual real functioning economy, and not everything's controlled by the Exchange Stabilization Fund and the Federal Reserve with a trading desk and the ECBs and all the European central banks and all that. How long can they keep this thing going? When do you think this thing blows, and what's going to be the first thing that blows it?
Well, again, it's been technology that has enabled this. Everything that we've seen in the past, we've said there's no way this could happen. But even since the financial crisis in 2008, the level that technology has advanced, and Bitcoin is a perfect example of how exponential the financial fintech, as they call technology, has advanced, has made this possible. It's actually given us, as I said, dot-com valuations in a Great Depression era. They've actually figured out a way to make the Dow go up, for instance, every day, or to at least bottom every day with the same pattern. I wrote about it 5 years ago, the dead ringer pattern, the dead ringer algorithm, just like the same thing I've been writing about with gold and silver. It's literally every single day, the exact same things, the exact same times a day. I've pretty much written an article on every single one of these anomalies: the 12 o'clock Capital Last Resort, the 2:15 a.m. at the open of London paper market, the 10 o'clock a.m. Key attack time #1, the 6 Sigma manipulation proof, which is the aftermarket, the 8 o'clock algorithm, the Sunday night sentiment. I mean, it's literally everything is the same, and it's all because they figured out how to use derivatives to manage markets. But the problem is that unlike stocks and bonds, which you can literally buy into oblivion. I mean, I wouldn't be surprised. Pretty soon the Japanese will run out of stocks to buy, so they'll just do wash trades with themselves at higher prices to make it look like stocks are going up. But the problem is when you're dealing with physical markets, you do have supply constraints. And that's why the gold and silver market are at the point where the supply is collapsing at the same time demand is going up. That's, economic Mother Nature 101. There will be shortages, and we've already had them. And the same goes conversely with the oil market. And again, I was an oil analyst on Wall Street for 10 years. I know as much about oil as I do about gold. And I can tell you that for 10 years, OPEC meetings were my Fed meetings. So when, no one else in my space, certainly not in the precious metal space, and few people in the whole alternative media have been talking about OPEC and what a lie this whole agreement was and that it would fail. In fact, I wrote last week about how OPEC proving how all cartels fail. OPEC is dying, and what happened yesterday with Qatar and or Qatar and the Saudi Arabia is only going to make it die worse. The oil PPT was created a year ago, and no doubt the U.S. government was involved in it because they're propping up Saudi Arabia to keep oil price up with paper buying. But look what's happening. It's made, just like with gold, it's made the problem worse. The problem's worse. The glut is worse. The coordination of OPEC is worse, and we're going to see collapsing prices because there's too much oil, just like we're going to see surge in gold and silver prices because there's not enough gold and silver.
That is a great thing. You're saying right now we're in a Great Depression. So we're getting these dot-com bubble prices, and you're saying if you peel back the onion and you look at the real economy, we're in an actual depression right now.
The only place we're not is in the words of the Fed. I mean, and the president, I don't even want to go into the whole thing with Trump. The Fed it's just a matter of, let's just say things are good. But now they're getting really worried. They're saying, we need evidence that it's not transitory, that everything's falling. And I'm going, people, do you remember that Janet Yellen at the end of 2014 said that the oil price drop was transitory? Okay, when the price was higher than it is today?
Yes.
She also said, by the way, it was a net positive for the economy. But she'll change her mind. The point is, all the Fed cares about is one thing, the stock market. If the stock market is going up, they'll say anything. They'll say we're going to raise rates. And they think that they've won this game. Like, hey, look, we're able to raise rates and keep the market going. But first of all, what they've done in raising rates by a measly, piddling quarter points, we're not even at 1%. It's taken a year and a half to do. All it's done is make the economy worse because there's so much debt in it that even a tiny bit of interest rate increase is killing it further. And yes, they've had the stock market go up, but what have they created? Dotcom valuations in an increasingly Great Depression era, which, by the way, are only being enjoyed by like 1% of the population. So again, they've gotten to the point where the greatest, as I call it, history's largest, most destructive Ponzi scheme is at its end. I mean, you can't do any more. They can't anymore say that the economy is getting better or that there's Trumpflation. Remember Trump? Does anyone remember Trumpflation? Right? We're going to have a rising dollar. We're going to have rising oil prices, rising copper prices, rising stock prices, rising interest rates, and falling gold. Well, check. We got none of those left except rising stock prices. So again, all those memes are dying. All the, as I say, money printing, market manipulation, and propaganda is dying. And all that's going to be left is hyperinflation. And at the same time, now, by the way, we have a leader in America who is completely not with the program. I mean, yes, he was dumb enough to hire all these Goldman Sachs people probably out of personal gain. But the fact is, he won't cooperate with all the stuff they want. And so it's just making their ability to manage this dying meme that much worse. And so I said, again, I wrote 3 articles in the beginning of this year that 2017 would be the year of money printing. Check, we're at $250 billion a month. The year of monetary revolution. Check, we have now gold and silver. And by the way, we're talking about the trend lines. Gold and silver have now both decidedly broke above their 200-week, not 200-day, 200-week moving averages. Gold is about 1740. Silver is about 1630. And now, more importantly, the 5.5-year downtrend lines, meaning going all the way back to the silver attack in May 2011, the gold attack in September 2011, the day that the Swiss pegged the franc to the euro, which couldn't be more gold bullish. Those trend lines are being broken too. Gold's is at 1277, so it's or 1274. It's above it now. Silver's is at about 1775, so within a few pennies of that. So again, all these memes are falling apart at the same time that incredibly powerful bullish trends are occurring. Again, when you're talking about 200-week moving averages and 5.5-year downtrend lines, believe me, the cartel has been doing everything in their power to stop these things. But the problem is when you're manipulating things for such a long time, you create such monstrous technical resistance levels that then when they're finally broken, like gold and silver did break the 200-week moving averages in 2003, and they went up above them for 10 more years. And the prices doubled and tripled and quintupled. And that's what's going to happen again, except this time around, we're not going to be stopped out by Obama having a meeting in 2013 with a closed-door meeting with the top 10 too-big-to-fail banks preceding the next 2 days where they smash gold. This time around, they don't even have, I mean, Wall Street and Washington aren't even getting along anymore. Trump's on another page completely, and they don't even have the ammo to do this. They don't have the credibility, the ammo, and when there's the slightest bit of pressure, and maybe this oil price fall that does it, or maybe it's something with interest rates or currencies, or maybe Trump lobs a bomb into North Korea, or something happens in Greece or France with a terrorist attack, and it's completely out of control, and they're going to lose control of the stock market or bonds or currencies or commodities, and then they're not going to be able to fix things. Yeah, I mean, they'll do their QE4 and 5 and 6, but at this point, there's going to be hyperinflationary fears, and at this point, there's going to be no physical gold and silver left to hold down. And then, of course, you have this other, as I said, front to fight in the cryptocurrency war, because as that goes up, that's going to also scare the hell out of people that there's currency in the system and that the system is dying.
And it looks to me, and I know you sell metal, and you're not really on here to sell metal, and you're not really making a big pitch to sell metal, but the analysis I'm hearing out of you is that well, cryptocurrencies have already kind of taken a big boost, and they're probably here to stay. But gold and silver really haven't taken off yet. I mean,
no, they haven't moved at all. They've been in this trading range for what, 3 or 4 years.
So if you were going to look for some, because there's a lot of people out there say, listen, I don't really trust the cryptocurrencies. I don't know. I'm afraid that it'll be confiscated, or they'll have an EMP attack, or whatever it is. I don't know. But and what I hear you saying is if that's the case, then just buy gold and silver and hold it. Am I wrong?
Look, here's the use cases of these. Here's the risk reward profile, right? You buy gold and silver at these prices. You're buying at a time where supply is the lowest it's ever been, and inventory and demand is close to the highest it's ever been, and production is falling, and we're pretty much, we're barely above the cost of production. But if you're talking about an all-in basis, meaning how much it costs to continue to explore and replenish reserves, which have been plummeting, we're way below the cost of production. So you have a floor here on price, no matter what happens. I don't care if they say that the jobs are going up 500,000 a month and GDP is growing at 7%. There's barely any downside in the worst case scenario because the supply demand is so tight, and because it's been around for so long and its use case is so well established, you don't have to worry about anything. I mean, yeah, you may underperform the stock market if they keep it going for a while, but you're not going to lose owning physical gold and silver. Now, Bitcoin is a completely different thing, as are the altcoins, because they are wildly volatile. Because they're thin, but more importantly, they're nascent technologies, and there's a lot of things that can go wrong. As bullish as I am about Bitcoin, look, they're in the middle of their scaling debate right now. As I said, they're going to have to go through the wars with the governments, because like I said, once the governments start to worry, like the Chinese instituted capital controls on Bitcoin back in January, they failed, but they can institute other ones. Or the United States could come in and say, we're going to ban it or shut down Coinbase, do all kinds of things to scare people off. So they're going to be wildly volatile. And yes, there is a mining cost of Bitcoin, which is going up. So you could say that you can't say when people say there's no intrinsic value. Trust me, the network effect plus the cost of mining is a major intrinsic value. But the fact is, they're going to be wildly volatile. And while they're at all-time highs now, they could just as easily plunge sometime soon, or they could double sometime soon. So that you're going to be scared. And plus, they're much harder to buy and sell because there are limited places to do it, and you can only buy. When people say, "Well, I can just buy it at 100,000," no, you can't just buy 100. It's so hard to get accredited and to find a place to buy like $100,000 worth. It's very hard to buy and sell.
For cryptocurrencies, Bitcoin.
Yeah, and so again, there's huge amounts of risk in it, but huge amounts of upside, whereas gold has the huge amounts of upside with essentially none of the risk. It's really just a matter of what makes you feel most comfortable.
And same with silver. That's a great way to end this. You're saying gold and silver have huge upside with limited risk. Cryptocurrencies have huge upside and downside with a lot of risk. So, but gold and silver and cryptos are not fighting each other.
No.
They're on the same team. Am
As
I
I
getting
said,
that?
I wrote an article last May, not this May, May of 2016. It's called Precious Metals and Bitcoin, Twin Destroyers of the Fiat Regime. I said they are allies. So when you have people in the precious metal universe talking down about Bitcoin, 99% of them have no clue what they're talking about. They have done no research. They just view it as a competitor and think that if they just say that Bitcoin is bad, that it'll go away and that everyone will ignore it. No, it's here to stay. And whether it's a total success or it has problems along the way, cryptocurrency is here to stay, and you should embrace it. And when it comes to gold and silver, you don't have to own Bitcoin. And I know it makes people upset that it goes up because you feel, well, we should have had this kind of upside. How come it's not us? But it's a completely different animal. And in the big picture, we should be thankful that cryptocurrency is here because it's fighting the same fight. And it's fighting it in a much different way. It's like guerrilla warfare because it's decentralized and it has less attack vectors because it's harder for governments to figure out how to get a hold of it. Like you said, governments will try to confiscate it. Impossible. If you hold it on a hard wallet, how can it be confiscated? They wouldn't even know where to find it. So again, Bitcoin, I wrote another article in December called Why Bitcoin Will Make Gold and Silver Go Up. And that's exactly what I was trying to say. Because it's becoming such a powerful threat, which governments will, I assure you, once you have any kind of crisis and prices start really going up and it's in the news, they will really understand what a threat it is. You know, they are going to focus their manipulative efforts on Bitcoin. Like, as I said, like Don Quixote flailing at windmills when they go after this decentralized structure. And it's going to weaken their defenses in the other front against gold and silver. And at the same time, they're going to think, why we don't even need to fight gold and silver so much because Bitcoin is the bigger threat right now. And what do you know? The next thing you look up, gold will be $2,000, $3,000, silver will be $50, $100, and no one will even blink.
You think they'll come to a point where they will okay, we're going to forget We're going to forget gold and silver. We're going to attack Bitcoin. If it goes up, we'll just let it go up. Is that what you're telling me?
I honestly do think that will happen. I'm not saying that'll happen now, but I do think cryptocurrency is going to become such a powerful force. I'm not saying this year. I mean, it's possible. The world is changing so fast. But let's say, pick a number, 3 years from now. I personally believe that the adoption and it's such a threat. Think about how much tax revenues governments lose and control they lose when people use decentralized currency. I think it will be such a big threat that will be where all the government is going to fix their attention on. And more importantly, when it comes to gold and silver, again, they are running on fumes now from a physical standpoint. At some point, they're just going to have to say, we got to stop fighting because we can't do it anymore. I mean, just how much lower can inflation-adjusted prices go down when you have record inflation and there's no physical supply to back it up? So I think they'd lose that war anyway. I just happen to think that because of cryptocurrency, it's going to hasten the end of the cartel, and it's going to frankly hasten their attention to something else, which, as hard as it's been to fight gold and silver, and believe me, it has been. Gold, for instance, in most currencies is trading at or near an all-time high. It's not like here in the United States where it's down 35%. Everywhere they're fighting and they're losing. But they're going to lose in a big way against Bitcoin, and they're just going to lose interest in fighting gold and silver, which will just migrate right up to their equilibrium price. Maybe it's 15,000, maybe it's 10,000, maybe if they hyperinflate, it's $1 million. I don't know. But the point is, they are going to lose this battle, and cryptocurrency is the best ally that they've ever had in the 15 years I've been watching this sector. Probably in the 100 years since FDR got rid of the gold standard.
Yeah, and you must, at Miles Franklin, you guys are big dealers, big-time dealers at Miles Franklin for precious metals. You must have, without disclosing too much, you must have wealthy clients piling in to particularly gold, probably silver, but wealthy, a lot of money, they put it into gold. You must have an upsurge in wealthy clients buying gold at this point, or do you? Can you explain that?
Well, this particular year has been an interesting one. I think our business has been about the same as last year, which is quite impressive, but it hasn't been so much due to retail buying. There's been a lot of trading, a lot of interest in our new storage programs. We have a private safety deposit box program with Brinks in Canada. So there's a lot of interest there, a lot of foreign interest. But here in the States, people have been fixated more on the rigged stock market, so you've had slow demand from the smaller investors. But I would say, yes, the reason we've held up with last year is there have been more bigger investors have come in than in the past. And now we're seeing investors come from overseas because they're getting nervous about what's going on in their country, and our storage programs really provide something that's unique to them. So but look, now that we're breaking above these trend lines, I think you're going to see the retail investor come back in because we're inches away from a major crisis. I mean, inches. And when we do, you're going to see the small investor come back en masse, buying coins, buying $1,000 worth, $10,000 worth, $20,000 worth, and that's going to, on a cumulative basis, especially when the Canadians join in and the Australians, you're going to see the kind of shortages that we saw in 2008 and 11, 13 and 15.
Andy Hoffman, financial expert. You are the marketing director, but that's really underselling who you are. Expert in oil, Bitcoin, gold, silver, the markets. You came on and killed it, my friend. Thank you for taking this to school. And you know what the good thing about what this interview did was explain to people there are going to be risks with cryptocurrencies. It's not going to be a glide-free path. It seems to me there'll be pretty much set it and forget it if you're buying gold and silver.
Well, and let me say one more thing, Greg, about the cryptocurrencies. Right? Again, there's a difference between decentralized ones like Bitcoin, which don't have a Bitcoin Inc., a corporate Bitcoin, a CEO, which there's really it's almost impossible for the government to theoretically attack it. Whereas most of these altcoins are centralized. They have a company and a CEO. And they can be attacked, and most of them are pre-mined, meaning kind of like pump and dumps. So there's going to be many. Again, you can liken it to the dot-com bubble. You will have barely any winners, but some of those winners could be some of the biggest winners of all time. But you're going to have a tremendous amount of losers because a lot of them are scams and a lot of them are just attracting hot money. So again, you better do your research on what you're talking about. And as for me, the only one I even have any interest in is Bitcoin because it's true. I think it has the ability to be a true game changer for the entire world and for the gold and silver market.
Well, gold and silver, it's hard to beat a 5,000-year track record, and you own it, you hold it, you have it. The risk is, well, not like it's not a, you have you have a U.S. Eagle coin, that's not a scam. You have a U.S. Gold Eagle, that's not a scam. You know that's not a scam. You at least end up with the coin.
No, they just found, what did they find? Like 50 coins that were back from Rome. They found them the other day, ancient Rome, and they look just the same as they did, and they're worth just as much as they did back then. I guarantee you they will never find any kind of substitute in nature for the monetary properties of gold and silver. And but now we have some technology that are going to supplement that. And I think it's going to make gold and silver more. It's kind of like, I say the King Arthur book, the once and future kings. For storage of value, gold and silver are, as far as I can see, going to be the once and future kings of real assets for this planet.
With that, we'll leave it. Andy Hoffman, thanks for joining us today on USA Watchdog. And of course, you are the marketing director for Miles Franklin, a financial writer, a financial expert, no doubt. Thank you so much for joining us today on USAWatchdog.com.
My pleasure.